Ford? Really? Is this what you call affordable? This is what you think Americans can actually afford today? Take a look at this.
All right, Pops, we are here at the Detroit Auto Show, and Ford is proud of themselves. We're looking at an Expedition, entry-level option, $55,000, yada, 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 yada.
Well, it's not like Ford. We didn't tell you to lower the damn prices, or Stellantis. You wonder why your products are stacking up? You wouldn't listen to us when we tell you to watch pricing. And Nissan, I don't know. You don't listen to anybody.
All right, folks, the car market bubble, I'm going to keep calling it that, is still starting to deflate. And we have more proof. 9 months ago, we filmed that video at the Detroit Auto Show, and we were talking about how car and truck prices were way too high. And now, fast forward 9 months later, Nissan's operating profit globally down 99% year over year for the quarter. And they say it's because they have to incentivize the sale of their vehicles. Ford profits plunging, Stellantis profits plunging as well in the same quarter. A bad outlook for automakers. Ford, Dad, their stock had the worst day since the global financial crisis when, if I'm not mistaken, they were on the verge of bankruptcy. So these automakers are struggling. The reason we're hearing about it now is because I think the dealer lots are too full. We know new car inventory is back to almost pre-pandemic levels. So Pops, at the bubble, it's starting to deflate a little bit, and prices are going to have to go lower. Incentives are going to have to go up, correct?
We've been speaking about this for the last 18 to 24 months. It's an affordability crisis, stupid. It's just that simple, okay? Well, I don't know why we make it so hard. The manufacturers have decided that they were going to go upscale and up profit margin to underwrite their foray into EVs. EVs have slowed down sales-wise, still selling, but not at the extent that they thought they would. Now, the manufacturers are, I don't know, kind of backing off the EV projections, but they haven't lowered the prices of their cars. They haven't started to produce more inexpensive cars, and it's starting to crush them. You look at the Stellantis dealers, CDJR. Those dealers have been complaining for the last 2 years. We need help moving the product. We need help from corporate. Corporate's finally going, well, maybe we built too many cars and it's time to help. The time to help would have been 12 months ago, but that's besides the point. The prices when we walked through the Detroit Auto Show were ridiculous. And until those prices come down, these manufacturers are going to continue to struggle.
Let's give them some credit, Dad. The prices are starting to come down a little bit because incentive spending is going up, just not enough. That's why earnings were hit so hard. Well, in part why earnings were hit so hard is because of incentive spending having to increase. JD Power has come out and said year over year, incentive spending on new vehicles is up 53%. And shocker here, Dad, still 16.9% of new vehicles sold in June of 2024 transacted above manufacturer's suggested retail price. That's down from 35% in June of 2023, but still that is asinine and that is crazy. You should be paying well below MSRP on pretty much every new vehicle out there because inventory is building up. Incentives are more plentiful.
And may I suggest, just because incentives have gone up doesn't mean prices can't come down. And here's an example of that. 1998, there was the 3.2 TL from Acura. In 1999, they came out with a new and improved model, okay? And they lowered the price of the vehicle by $5,000, and they added equipment to it. And that vehicle sold at MSRP for nearly 2 years because even at MSRP, it was a tremendous value. So the manufacturers, if they wanted to, could lower the price of their vehicles in addition to adding incentives to help move them. The key is affordability. It hasn't changed. And that's what we need to see happen.
All right, and here's an example of affordability at play. I went to the CarEdge car search. I have Insights 2.0, and you can see here a new 2025 Ram 1500 Laramie, which costs $71,000, has a 645 days supply. This is why Stellantis is in hot water. Same reason over at Ford, same thing over at Nissan. These numbers are still shocking, but the more affordable tradesman, which is $46,000 price point, think about that, a nearly $25,000 difference in MSRP. So a very differently equipped vehicle has only a 401 days supply. So it's moving much faster. It's selling much faster. It's in much more demand. yet it's still way oversupplied. The automakers want this number, Dad. This number is critically important for everyone to understand. Automakers want this number to be somewhere around 90 days. Life is good when your days supply of inventory is around 90 days. And we know you can check this out yourself on CarEdge.com. Use the car search. You can see which vehicles in your area are oversupplied. And these brands that are struggling right now, again, Nissan's profit was down 99, not 19, not 29, not 30, 99% year over year. And it's because their market day supply is so high that they're having to find ways to incentivize the purchase of their vehicles. Offering 0% financing when the average new car interest rate right now is almost 10% is not inexpensive. It's very, very expensive. And so it's just interesting. You can see the affordability crisis cropping up even in these pickup trucks that don't move that fast. The more affordable ones move a little bit faster, even though it's still really slow.
Absolutely. It's always going to come back to affordability. If you want to cater to only 17% of the population, it is going to be harder for you to move the requisite number of units that you need to move. If you want to cater to a larger percentage of Americans, then you need to provide them with more affordable alternatives. And if you do that, you can sell the requisite number of vehicles you need to sell. It's not hard. It's just hard to actually do it.
It absolutely is. I have a question for our community. Let us know in the comments down below. How much further do car prices need to come down for you to be in the market to buy a new vehicle? We're just talking new cars for today's video. How much further do car prices have to come down for you to be in the market to buy a new vehicle? The average transaction price for a new car right now has come down to $47,000, although monthly payments are up because of interest rates. So let us know in the comments down below how much, what percentage would car prices need to come down for you to be interested? I will just throw my number out there, Dad. If I'm buying a vehicle and I can get an extra, 15% off, I'd probably be interested. You tell me that Honda. We just did a Subaru Crosstrek deal recently, a Subaru Crosstrek Wilderness, $37,000 MSRP on that vehicle. We got the customer a $5,600 discount. Okay, I'll buy that car. I would buy that car with that discount. So it's like somewhere in that 15% range for whatever reason makes me feel more comfortable with the idea.
I can't wait to see what people say. CarEdge Concierge, the revolutionary way to buy your next car. You tell us what you want, and our team of experienced concierges goes to work on your behalf. They source the vehicle, negotiate the price, and make arrangements to have it delivered to you directly. Never set foot in a car dealership again. CarEdge.com/concierge to learn more about how you have the power to save both your time and money. Let the car buying revolution begin at CarEdge.
CarEdge.com, all sorts of free resources back there, Dad. Like what?
Oh, I don't know. What's your car going to depreciate over time? How much is your insurance going to be? What should you expect to pay for fuel? It's all there. All that information in one place.